Hello traders, today's topic is going to be, is there a market shift coming? I believe there is. Bull markets die hard. This transition is going to take quite a while. We are starting to see lots of body blows that the market is starting to take, but there's no knockout punch. We certainly didn't get one today. As always, I like to start these videos off with a review of my previous pick. If you watched my Sunday video, you'll know that I recorded it early Sunday morning. There was no way for me to know what the futures were going to do, but I could pretty much tell from the rhetoric that the tariff news was going to weigh on the market. And of course, overnight, the S&P futures were down about 120 points at their lowest point. They opened about 100 points lower. So yes, the market did sell off. Apple was one of the stocks that I had mentioned to you that we did not want to see a massive gap down early. We wanted to see it open a little soft, and then that would give us an opportunity to enter the trade. And so here's the price action on Apple on Monday. So you can see it did open a little bit lower. It didn't plunge 100 points like the S&P 500 did. It just dropped down a little bit, and that gave you a really nice entry point. So it opened somewhere around 231. We had a little intermediate low right here of about 226. That's a 5-point move on Apple. That's huge. Let's say that you didn't rush in. Let's say that you did rush in. Let's say that you shorted right here. After an hour's worth of trading, you decided, the market's going to continue to go down. I'm going to short Apple right here. Well, what happened was Donald Trump had met with Mexico's president, and he decided that he was going to delay the tariffs by 30 days because they were going to put 10,000 troops on the border. I also mentioned in that video that I felt these tariffs were temporary. Trump was trying to garner a response from Canada and from Mexico. That was his intent, and he got it. And that they could quickly be reversed or postponed. That's exactly what happened. The S&P futures rallied 50 points on a single 5-minute bar. Massive bounce. These are the kind of moves that we're going to be expecting. This is the way that this rhetoric plays out, especially in the first 6 months. We're going to see that type of volatility until the policies start to settle in a little bit. So you get this big bounce in Apple. Shoot, I didn't enter well. I got blindsided by some news that came out. Doggone it. Well, Apple finds resistance at VWAP, and you still had an opportunity to exit this trade even if you had shorted the low of the day. You still had an opportunity to make money on that trade. So Apple was a really nice pick. Relative weakness. You can see Apple has moved higher yesterday, Tuesday, this morning, bam, right back at it. I'd mentioned to you that as we start to impose tariffs on China, they're going to fight this. Apple is our largest market cap stock, and they do a lot of business in China. That's who they're going to go after. They're going to make it very difficult for Apple to operate in China. They're going to find ways to restrict their profitability as a countermeasure to import tariffs. So Apple still looks good. PII was another stock that I showed you, and I gave you lots of stocks that you could consider. And here you've got the initial drop, and look at that bounce right in there. Now that again was on the Mexico news. Let's say that you shorted that low. Got blindsided by news. You still had an opportunity to make money on this trade. And you can see that the stock did make a lower low. If you saw this type of knee-jerk reaction, the gap is not filled. Once you start seeing VWAP fail after this knee-jerk reaction, this is a great place to add to that short position, and then you can take profits on the whole enchilada down on the low. So another decent pick. Trying to recall what the other pick was that I had. I think it might have been LVS, which LVS actually looks quite weak today. There you can see that's reaction Monday. You had this gap down and a continued decline with a new low of the day later in the day. So all three picks worked out fine. So what's going on right now? What happened? Well, we got this rebound. And let's zoom out just a little bit. So there's your big drop on the initial tariff news. There's your bounce. There's some follow through yesterday. You can see that the overnight gap from Monday was filled. Okay, this morning, test the downside. Market has been able to grind higher. I'm not looking for a whole lot of anything to happen right now because the market is transitioning, but there's not that knockout punch, that bad news that we're seeing. And so I'm going to go into the daily chart. Not going to spend a lot of time on market analysis. Going to try and keep these videos very short. We had earnings from Google. Google sold off. We had earnings from AMD. AMD sold off. We had Tesla, Microsoft, Meta, all reporting earnings last week. The last of the mega cap tech companies to report will be Amazon on Thursday. We had ISM Manufacturing came out yesterday, and it was about in line with expectations. ISM Services this morning came in at 52.3, I believe. That was a soft number. Somewhere in the 54.2 range was expected. Service sector accounts for 80% of our economic activity, so it is important. We've also seen mortgage applications way down. We have new home inventories. These numbers all came out today. New home inventories are at levels that we haven't seen in decades. 2007, that's the last time the home inventories were at this level. So the housing market is going to contract. We had JOLTS come out yesterday. Lowest job openings in 14 months. So the job scene is starting to soften. But ADP came out today, decent number. 183,000 was actually a pretty strong number. 146 expected. So those are, just off the top of my head where the numbers came out. 183,000 jobs in the private sector. That is pretty dang robust. So I don't think we're going to get this whammy of a jobs report on Friday. And if I take a look at the market and I zoom out to a weekly chart, I'll tell you exactly where I feel we are. I feel we are right here, and this was in December of 2021, January of 2022. The Fed saw inflation spiking. They were going to aggressively raise interest rates. And so the initial reaction was, whoa, reduce risk, reduce risk. The Fed is tightening in a massive way. This is going to cause a recession. And so you had this choppy move lower by the market over the course of a year. The recession never happened. So you get this bumpy, choppy type of bear market. And then eventually, when the recession never materializes, you get this big market rally. Well, now I feel we're in a similar situation in that economic conditions are continuing to deteriorate globally. Seen it in Europe, seen it in China, seen it in many different places. Central banks there have been easing to no avail. It's not stimulating economic growth. In the US, we haven't seen that yet. So the Fed has remained fairly hawkish, and the jobs scene has remained pretty good until we see a deterioration in the jobs numbers. I think the market's going to hold up quite well. I also think that one bad jobs number is not going to do it. It's going to take 2 or 3 consecutive bad jobs reports to really crack this market down, because look at how strong the trend has been. Buyers have been conditioned to buy dips, and they're going to continue to do that until they're discouraged from doing it, until the market keeps selling off. But in here, we had that same type of uncertainty. This is a weekly chart, and we had a horizontal trading range as the market was transitioning. So hence today's thumbnail, market changing direction here. Yes, I believe so. So let's take a look at what the price action is doing on a daily chart, and then let's set ourselves up and let's see if there might even be a little bit of a day trade in here. I am looking for an opportunity to short this bounce in here. The move down, mixed overlapping candles. The rebound, mixed overlapping candles. There's really nothing there for me. Yes, we could possibly try and fill this little gap in here. Starting to see a little bit of resistance there. There's nothing here. So, I mean, this is indecision. That's a pretty big move. That tells me that sellers and buyers are both fairly in balance. The volume is horrible. Look at that crappy volume. We're stuck in this range, like it or not. But I do feel that there's a decent chance for the market to move lower. I am generally more bearish than bullish right now, and CPRI is a short that I really like. And I like it at this level. 2067 is a good level. They are a luxury retailer. They came out with very weak results. So that means that high-end goods, Versace and such, they did not move well during the holiday season. That is their most important season of the year. So very poor earnings reaction. Let's take a look at the D1 chart. And there you can see this is a significant upward sloping trend line. Very balanced. I like that. I like the fact that it's gradual. That is a nice crackdown. And I believe that the stock is going to be able to challenge that low of $18.70. Not today, but over the course of the next few days, the next week, I expect it to continue to drip lower. That was a pretty big move down and quite a large disappointment. So what we'd like to see is, now that we've got this market bounce in here, what do we want to see the stock do? Okay, the market sells off. We already know the stock is weak because of earnings. We get this market bounce. What do we want to see the stock do? We want to see the stock flounder around. The stock did not shoot up through VWAP when the market bounced like this. That would have been a sign that buyers are viewing this drop as an opportunity to scoop it and get long. We didn't see that. In fact, the stock has been sitting down near its low of the day. So when we get this lower high, double top, and a breakdown below VWAP, and the stock has not been able to rebound, we know that we should have a decent entry point for a short position, and our expectations at minimum are for the stock to make a new low for the day. So at 2076, which is where it currently is, 2080, we're just continuing to watch the market here. We've got a low of the day of $20.36. So if you can make 50 cents on a $20 stock, that is a dang good day trade. And that's what I'd be looking to do. The higher it goes, and eventually you want to see that resistance before it gets to VWAP. Beautiful. You want to see the market struggle to make a new high. No, it can't. This is going to be a lower high. It just can't get through. Okay, I've got enough information to take a bearish position. Overall, as far as the market's concerned, we do have the 50-day moving average, which is down near the low of the day today. It's near yesterday's open, so that is going to be a support level. Yesterday's high is going to be a resistance level. So those are our parameters for the day. Let's take a look and let's see if there's anything else that is of interest to me. Google, pretty big breakdown today, so we'll take a look at that. You can see another low plus trend line right in here. Tested that 50-day moving average, but the 50-day moving average held. When we break those, we want to blow through them. We want to annihilate them. We want to obliterate them, and we want to be well below that moving average on the open. Okay, so it never gets a chance to act as a magnet. Google didn't do that, and it's kind of sitting around that 50-day moving average, so it's not a good entry point for a trade. Continue to take a look down, see what else we've got. I haven't even looked at the bullish side, but I probably could find some really good candidates there. Got ABBV starting to break out on the upside a little bit here. Let's take a look and see if we've got any major crosses here. So I'm going to be looking for a breakdown of a trend line. Anything new there? Merck was very weak yesterday. So I'm just going through and I'm looking for, these are all bearish crosses. Stock was above a major moving average. Today it's below a major moving average. And I'm just taking a look to see if there's anything else that we might want to highlight. I think CPRI might be my pick of the day if I can't find something better. And that's how I would trade it. I would keep an eye on the market. And right now, I'm really not doing a lot of swing trading. I'm doing mainly day trading because the market's not giving me anything to work with. Here's that horizontal range. You can take the high from last year and then approximately, I'd say 585 is kind of the low end of that trading range. But you can see really from October, we haven't moved anywhere in the last 4 months. And we're right smack dab in the middle of that range. So there's just not a lot to sink your teeth into. I don't want to highlight a bullish stock because I'm fairly bearish, but let's take a quick look. For those of you who don't share my sentiment, maybe I can find something, but I'm not going to review the pick. GILD, that's actually quite a nice little breakout right in there. It's a choppy stock though. And when you see something that does this kind of price movement, you never have to buy the actual breakout. And it doesn't have massive volume. So it's not like this stock has some kind of incredible news today, like a new drug that's come to market. All right, well, I think GILD looked pretty good on the long side. And let's go in. I want to keep these videos short, so I think I'm going to conclude with that, but that's the process right now. My advice to you, if you're a day trader, if you're a swing trader, keep your trades to a minimum right now. The market's very choppy. We've got a lot of the tariff news coming out. There are responses both ways from us and from the other countries, so that's going to keep us moving in this range, but in a volatile fashion where you don't know what's going to happen overnight. As far as day trading, what I like doing there is I like waiting for that first move to run its course. And if it's wimpy, like yesterday, I was looking at this. This was not a high quality bounce. Mixed overlapping candles in here. We're starting to hit resistance. This is where I took a really nice short. Did well on it. That was the move I was positioning myself for. Whatever that first move was, if it was going to be wimpy, I was going to fade it. And if you've used that type of strategy, mixed overlapping candles, gap down, wimpy gap down, this is where you would take a position. This was actually Monday morning. Okay, on that big tariff news, you could have gotten in here and said, all right, we're in the gap. Now we're ready to fill. This is a wimpy move higher, okay? There's nothing to it. Mixed overlapping candles, no volume, no interest. And then eventually you get your crackdown later in the day. So here you've got wimpy first move of the day, mixed overlapping candles, nothing going, big, long, bullish engulfing candle off the low. Bingo! This is the opportunity. This is my window. Okay, you get a nice little move in here. You can take profits. You can see what happens. And you can exit the trade or you can hang with it if you feel that the stock is really performing well. Get this little drop back below VWAP. Stock is holding, holding, holding. Now you get your next leg higher. You can add to the position here or you can re-enter the position once the market gets above VWAP. This is all program dominated chop, okay? The buy and sell programs are out there trading back and forth and there's really no market pace. I hope this helps you. CPRI, that's your short for the week. Look for that jobs report on Friday to generate some decent movement. The numbers have been coming in pretty good. Okay, Jolt's painted a pretty bearish picture a month ago and then earlier this week, but then out comes ADP, strong number. Initial claims last week, strong number. What's initial claims going to look like tomorrow? I don't know. If it's somewhere around the 210,000 range, that's going to bode well for Friday's unemployment number. And so let's see how this plays out. We got to get some news. The market is simply going to be trapped in this trading range. I do sense that there is a market shift that's coming, but it's going to take lots of these body blows to set up until we finally get that knockout punch. Thanks so much for watching, everyone. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.